The economic forecast of 2024 is looking positive with robust GDP growth and declining inflation rate. However, there are still concerns across the global economic landscape. Investors are optimistic about potential U.S. interest rate reductions as early as May, but the Federal Reserve has indicated that it will not prematurely claim success. As nations navigate a complex economic environment, they're confronted with a range of challenges, including potential surges in inflation, increasing debt burdens, and decreasing consumer savings. Global GDP Growth Outlook 2024. The real GDP growth in 2024 is predicted to see a modest uptick of 3.1%, a marginal increase from the forecast made in October. Although all regions are expected to experience positive growth, the extent of this growth is anticipated to differ significantly due to a multitude of factors, ranging from the impact of increased borrowing expenses to subdued consumer sentiment. In the United States, the GDP growth is expected to maintain a moderate strength underpinned by increasing real wages that are enhancing consumption throughout the economy. However, compared to the previous year, the growth is anticipated to decelerate due to a weakening labor market. In 2024, Citigroup made an announcement about laying off 20,000 employees following a less than satisfactory year. Concurrently, tech giants such as Google, Amazon, and Salesforce are downsizing their workforce. In addition, UPS, the package delivery behemoth, announced job cuts of 12,000. In China, the economic growth is being hampered by issues in the property market. The fall in real estate values has had a negative impact on incomes, assets, and public sentiment. As a result of these challenges, the growth in consumption is predicted to decline over the year. In Latin America, Chile and Brazil were among the first emerging economies to increase interest rates in 2021, and they were also among the first to lower them the following year. Due to the improvement in domestic demand and the easing of price spikes, the IMF has revised the 2024 outlooks for Brazil and Mexico upwards. Europe is predicted to experience the slowest growth among all regions at 0.9%. In late 2023, Cigna, a European property firm worth billions, collapsed following the most significant rise in interest rates in the 25-year history of the European Union. The outlook is further clouded by lower consumer sentiment and the effects of high energy prices. Risks. There are several key risks that could potentially affect global GDP growth. Escalating commodity prices. The Israel-Hamas conflict could lead to a regional spillover, causing energy prices to spike. This region accounts for a significant portion of global oil and gas exports and a considerable amount of international trade. Persistent inflation. Supply disruptions and an overheated labor market could intensify inflation, possibly resulting in higher interest rates. This could negatively affect stock markets and financial stability. Slowdown in China's economy. A downturn in the property market could impact domestic growth and consumer confidence in China, leading to reduced consumption. Given China's significant contribution to global GDP, this could affect countries dependent on trade with China. Despite these risks, the economy could also see positive developments. For instance, if inflation decreases faster than expected, it could lead to monetary easing and stimulate global economic growth. As seen in 2023, the global economy could defy expectations in 2024 as well. Join our vibrant community by subscribing to our channel for the latest updates and amazing content. Tap that subscribe button and turn on notifications to stay in the loop.